Can CVM recover to the $7 levels once again, or is this a ticker which is dead? In today's video, we're going to be answering that question, and I'm also going to be telling you guys what you could learn from what just happened to CVM in order to make you guys a better trader in your potential future trades. With that said, my friends, let's get into it. So today's video is going to have three main segments: the why, the what, the where. The why, we're going to be doing a catalyst breakdown, going over the news regarding CVM, which caused the stock to go from freaking $3 all the way upwards of $7, and now sitting back down to $3 again. And then we're going to be talking about the what, the stock analysis, which is going to be the most important part of today's video. Then the where, we're going to be talking about the charts, where to get in, where to get out. Now, I'm going to be trying to put an educational spin on everything I say today. So please, 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 if you can, take some notes, do whatever you can in order to kind of absorb the information that I'm sharing with you today, in order for you guys to avoid being stuck in situations like you are right now, right? In CVM, maybe you have a $5 average, maybe you have a $4 average, maybe you have a $4.30 average, right? Whatever it may be, you don't want to be stuck in a situation like this ever again. So let's talk about it. So first things first, we want to talk about the why, right? Why was this ticker moving in the first place? Well, the company did have some amazing news, right? Causing the stock to go from freaking, all the way from $3.60 all the way upwards of $7. And the news was that the company announced that, let's go ahead and read it. There we go. So the company, signs a partnership agreement with Saudi Arabian pharma and healthcare company on regulatory and commercial activities of Multikin in Kingdom of Saudi Arabia, right? So that caused the stock to go crazy, okay? That caused the stock to go crazy fairly so, right? Because this is some massive, massive news, right? Now, there was a lot of volatility in the stock, ended up coming back up again. But what happened next? Well, what happened next would shock majority of traders unless you're a seasoned one, right? And what I'm going to try to do in today's video is turn you into a veteran, right? Turn you into a veteran to make sure something like this never happens again. The company came out, and then the company announced a $5.7 million offering, selling shares at $3.80 each, right? 1.5 million shares at $3.80 each. Now, why is this massive? Well, stock market is simple supply and demand, right? The stock market is supply and demand, right? When the supply is limited and demand increases, prices go up, okay? Now, what happens when the demand is the same, but the supply is increased by 1 million shares, right? 1.5 million shares. What happens when the supply of the stock is increased by 1.5 million shares? Well, the prices drop, right? And the prices drop aggressively because now there's so much more supply than this demand ever wanted. So everyone's like, oh, I'll just pay less, right? It's worth a lot less now, right? So with that said, that's what we're seeing over here. Now, how can we anticipate something like this, right? How can we anticipate a public offering? How can we anticipate a direct offering? How can we anticipate dilution, as they call it in general, right? Because the shares are getting diluted. The shares are becoming worth less, hence the word dilution. So there are three things that lead us when it comes to decision making regarding whether or not a company is going to have a public offering, direct offering, whatever type of offering. Number one, motivations, okay? Motivations. What's the biggest motivation of all time? Money. Moolah, okay? Cha-ching, money. So does the company need money right now, right? Does the company need to have a offering right now to raise money? Is the company going broke? What's going on financially? Then the next thing which we want to look at is going to be historical data, right? Is this a company which is anti-dilution, or is this a company that doesn't give a shit? Is this a company that's like, yep, dilute, rug them all, dilute? Third is going to be the ability to dilute. Does the company have the ability to dilute behind closed doors right now? Do they have a massive overhead supply? Do they have any warrants? What is going on? Okay? These three things lead us to our decision making when it comes to anticipating whether or not a company is going to have an offering or not. Okay? Now, how do we get access to this information? Well, the first things first, their finances. The finances, you got to go through their, SEC filings and everything like that, which I've done here for you guys, right? Now, you guys may be like, oh, I don't know how to go through SEC filings. Then check out the Discord, okay? The Discord, we show you how to get access to SEC filings super fast. We literally show you how to get access to the information in less than 5 minutes, okay? We show you how to get access to the company's cash life remaining in less than 5 minutes. Anyways, so this is what we're looking at over here, right? In order to anticipate whether or not the company has financial motivations to go ahead and dilute or not. So the company has right now $1.8 million. This is based off of their most recent SEC filings. That was before them having the dilution. Remember, before diluting, this was their numbers. So they had $1.8 million. And their operating expenses every month was $4.25 million. So they have $2 million in the bank. Every 3 months, they're burning $4.25. They have 40 days of cash, 45 days of cash left on hand. So therefore, their motivations of dilution is extremely high, right? Red flag. Next, let's talk about the history of the company. Historically, the company's diluted a lot. Red flag. Now, the thing that made CVM special was that their overhead supply, the likelihood of them diluting right now was actually low. which was very interesting. However, historically it was very high and their cash yield was very, very high. Therefore, dilution was on the table. Listen, I've said this before, I'm gonna say it again. One of the things that a trader can't ever say is I did not see that coming, right? Because your lack of foresight is just in line with your lack of preparation. That's all that means. That's really all it means, right? If you didn't put in the work and you look at the stock and say, hey, you know what? They could dilute and you didn't play with the stop loss, then that makes sense, right? You took the L. Now, what can you learn from this? What you can learn from this is there are a lot of companies that are doing this. A lot of these penny stock companies do this. You need to pick out the right ones. You need to pick out ones that are not diluting, that are not rug pulling their own investors. Because now you guys may be confused a little bit and say, Sam, why would a company hurt their own stock? Well, you need to understand that fundamentally speaking, the stock is not the company and the company is not the stock. And there are things that are good for the company that are not good for the stock. For example, dilution, guess who gets rich? The company. Guess who gets poor? You. Guess who gets hurt? The stock. A shares buyback, bad for the company, but guess who makes money? You, because the stock goes up, right? Now, shares buyback is pretty much a reverse of dilution where it shrinks the supply, okay? They're taking supply out of the markets instead of adding it to the markets. So when it comes to CVM, guys, where do I see this ticker heading from here now? I could see it pop up and test $4. I could honestly see that on Monday morning at like 4 a.m.-ish. But for me, this ticker is not getting above this $4.50 level. And maybe $4.50, maybe it'll get there, but it's never getting above 5 again because, the way they're adding these shares, man, it's predatory and it sucks. And I think that, I always say, I think, instead of the pattern day trading rule being a thing, I think that the SEC needs to put in a rule regarding dilution, but the SEC doesn't give a fuck, okay? The SEC doesn't care about anything. The SEC just cares if you trade more than 3 times per week in your 25K account, less than 25K account. That's all they care about, okay? It sucks. It really sucks, but that's the reality. Now listen, if you're ready in this trade, I'm here to tell you, right? Relax, calm down, okay? Calm down. You should not try to make back the money as fast as you can. And I always say this to people. It says, listen, if you've lost money right now trading, you're in quicksand. The faster you try to move, the more you're going to sink, the harder you're going to sink. What you need to do right now is take a step back and slowly but surely follow a strategy that works and follow a strategy that's going to help you consistently make back the reds that you lost on CVM. Now, what I got on the table for you guys. I recommend you guys checking out Top Trade Academy. What's Top Trade Academy? Top Trade Academy is where we have assembled a group of profitable traders who are here on a daily basis, sharing their entries with you guys, sharing their knowledge with you guys, telling you guys when to get in, when to get out, and every single thing is given to you on a silver platter, okay? We have day trade alerts, swing alerts, option alerts. We already have over 400 members coming back month after month. Why? Because they're making money, okay? Because people are making money. Nobody keeps coming back unless they're making money, okay? So give it a shot, guys. The link is in the comment section and description. And that's all, okay? We've been kicking ass, man. We've been kicking ass day in, day out. Just try the 7-day free trial. That's all I can say to you guys. Maybe pause and read some of these. Shout out my man. Literally yesterday, this message made my day, man. Thank you. I appreciate you. Anyways, one more thing as well. Right now, we do still have the sale going on from last week, which the next 10 people that join get access to it for a 50% discount. There's less than 10 spots left, but there should be some spots available. Remember, we got 400 people coming back month after month paying full price. Clearly, the full price is even worth it, okay? So if you can't get at the 50% spots, just join for full price. It's worth it. Anyways, thank you for watching. Happy Wednesday trading, my friends. I appreciate you guys. Thank you for watching. Your boy Sam from Top Academy.